This is my investing blueprint with the 15 money rules that make ordinary people rich. Investing is not about getting rich fast. It is about making good decisions again and again over a long time. Most people fail because they chase quick money, follow crowds, or invest with emotions. Real wealth is built slowly. If you understand this one idea, you are already ahead of many people. The first rule of investing is simple: never lose money. The second rule is never forget the first rule. This does not mean you will never have losses. Every investor will see prices go down. It means you should avoid foolish risks that can destroy your future. Protecting your money is more important than chasing huge returns. Before you invest in yourself first. Learn skills, read books, improve your thinking. The best investment is the one you make in your own mind. Knowledge grows like compound interest. The more you learn, the more valuable you become. A person with strong skills can recover from failure faster than someone who only depends on luck. One of the greatest secrets in investing is compound interest. Compound interest means your money earns profits, and then those profits also begin to earn profits. It is like planting a tree that keeps growing branches every year. Time is the most powerful tool in investing. Many people start too late because they think they need a lot of money. You do not need to be rich to begin. You only need to begin early and stay consistent. Saving money is the foundation of investing. If you spend everything you earn, you will never build wealth. Many people buy things they do not need just to impress people who do not care. Wealth is often quiet. Rich people are not always the people driving expensive cars. Sometimes real wealth is hidden in discipline, patience, and smart decisions. You should never invest in something you do not understand. If a business is too complicated for you to explain simply, avoid it. Many people lose money because they follow trends without knowledge. During every generation, there are new, exciting investments that promise fast riches. Some people get lucky for a short time, but many lose everything. Do not let excitement replace understanding. A good investor thinks like a business owner, not a gambler. When you buy a stock, imagine you are buying part of the whole company. Ask yourself simple questions. Does this company make useful products? Do people trust the brand? Will people still need these products in 10 years? Is the company making steady profits? Great companies survive hard times because they solve real problems. One of the biggest mistakes investors make is emotional investing. Fear and greed destroy more money than bad businesses. When prices rise quickly, people become greedy and buy at high prices. When prices fall, people panic and sell at low prices. Smart investors do the opposite. They stay calm when others panic. They look for opportunities during fear. The stock market is like a person with changing emotions. Some days it offers high prices, other days it offers low prices. You do not have to react every day. Patience is a huge advantage in investing. The market rewards people who can wait. Many people want action every day, but great investing often means doing nothing most of the time. Diversification is important. Do not place all your money into one investment. If one investment fails, you should still survive. However, diversification does not mean buying random things. It means owning different quality investments that reduce risk. Smart diversification protects your future. Debt is dangerous if used poorly. Credit card debt is one of the biggest enemies of wealth. High-interest debt grows against you, just like compound interest grows for investors. Many people stay trapped because they spend future money today. Avoid unnecessary debt and live below your means. Freedom comes from controlling your expenses. You must also understand the power of habits. Small daily habits shape financial success. Saving a little every month may seem small, but over many years it becomes powerful. Successful investors are not usually smarter than everyone else. They are often more disciplined. Discipline beats talent when talent lacks discipline. Long-term thinking is very important. Most people think about next week or next month. Great investors think about decades. If you invest for the long term, short-term market crashes become less frightening. Markets rise and fall, but strong economies and strong businesses usually continue growing over time. You should pay attention to value, not hype. Price is what you pay. Value is what you get. Expensive things are not always valuable, and cheap things are not always bargains. Smart investors search for quality at fair prices. They do not buy because everyone else is buying. Another important lesson is to stay away from investments that sound too good to be true. Scams often promise guaranteed profits with little risk. Real investing always has some risk. If someone promises easy riches, be careful. Protect your money carefully, because rebuilding from major losses can take years. Reading is one of the strongest tools for investors. Read financial reports, business stories, history, and biographies of successful people. History repeats itself in markets because human emotions stay the same. Fear, greed, hope, and panic have always existed. Investors who study history make better decisions. You should also choose the people around you wisely. Spend time with honest, disciplined, and intelligent people. The people around you influence your thinking. If your friends waste money and chase shortcuts, it becomes harder for you to stay disciplined. Good environments create good habits. Many people ask when they should start investing. The answer is now. Waiting for the perfect time often leads to doing nothing. Markets will always have uncertainty. There will always be bad news somewhere in the world. Start small if necessary, but start. Consistency matters more than perfection. Investing is not only about money, it is about freedom. Money gives you choices, it gives you time, it reduces stress, it allows you to help your family and support causes you care about. The goal is not simply to become rich. The goal is to build a stable and meaningful life. The greatest investors are not controlled by ego. They admit mistakes quickly and continue learning. Nobody wins every time. Even the best investors make bad decisions sometimes. The key is to keep losses small and lessons big. At the end of your life, success will not only be measured by money, it'll be measured by trust, relationships, reputation, and character. Build wealth the right way, stay honest, stay patient, stay disciplined. If you can control your emotions, think long-term, and continue learning, you will already be ahead of most people in the world. The stock market transfers money from the impatient to the patient. Remember that patience is not weakness in investing. Patience is power. Subscribe to this channel for more business and investment tips, tricks, and advice.